Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased price action analysis. And holy moly, donut shop. We got that big breakout, guys, big breakout of the rising wedge. We had a breakout on Thursday from this yellow trend line where it gave us the third test, not as resistance but as a support. It bounced, showed buying pressure, and then man, yesterday it gapped up above the 404 level, 61.8 fib level. I mentioned you guys, above 404 is bullish. But watch that 406 level for the rising wedge. Uncle Charles always tell you guys, I long breakouts of resistance and short breakdowns of support. I keep it simple. I don't try to get fancy. I don't try to learn all these cool terminologies and trade with 15 or 20 different indicators. I keep it very simple. The less is better. The less noise, the better. So I can focus on what's really important, which is the price action setups. Okay? I get people watch the news. When the news was talking about the bank crisis and all the happy stuff, the market rallied. All right? The news is manipulated. It's manipulative. I do track the news. I just don't trade the news. I don't go bearish when the news tell me to. I don't go bullish when the news tell me to. I do what the price action says because the price action represent the action of the market movers, the market makers, the whales. They move the market. All we can do as retail traders is follow them. Get on the ride. Enjoy the ride. All right? This ain't our theme park. We're just here. We're just guests trying to enjoy a ride. So we broke this rising wedge. I know rising wedge is a bearish structure, but we still got to watch the breakout and the breakdown. If it's a rising wedge and it break down, that's bearish, right? Instead, we got a breakout to the upside, okay? I wrote here in my Discord, I gave us a bull case scenario and a bear case scenario, all right? I mentioned SPY spent majority of the day yesterday on Thursday basing under the 404 level and also closed just below. I am short-term bullish as long as above 402. 402 was this yellow trend line. We had a breakout. So since we had a breakout, I just assumed bulls are in control. Okay? If it would have broke back down, which I wrote right here, if SPY can't clear 404, look to short at 402 fail, targeting the 50 DMA and lower targets. We're just looking, identifying the levels and reacting based on what the price action does. If it would have broke down 402 or 404 because it gapped above 404, if it would have broke down below 404 or broke down 402, I would have definitely shorted. But instead, it gapped above 404. And I wrote here to look to long with 406, 408, then 410 in play. All right? That was our first resistant level. The 406 level right here. That yellow line. Okay? This is the 930 candle. Market open at 406.66. That's what the market opens. So you always want to identify where the support and resistance level is. The first one was at 404 for support, and the first resistance was at 406. So as traders, we just want to see what's the price action going to do. And we got to have a plan of reaction, right? With proper risk management. So if it broke down 404, I would have shorted. If it broke down up 406, I would have long. And look at that. We broke out 406. This is a 15-minute chart. 15-minute chart is what I use to trade. 15 to 30-minute chart, because sometimes, especially this past week, the market is so choppy and noisy. So what I do when the 15-minute chart is acting noisy, I go down to a 30-minute chart. And if that's acting noisy, I go to a 1-hour chart. I think you guys get it. But here on a 15-minute chart, based on the 406 level, that 406 level is based on the rising wedge on the daily chart. Okay? It broke out. Tested it as support. Notice it never closed back below 406 on the 15-minute chart. It washed below it. A lot of people get confused by that. Just because it washed below it, meaning it go below it, it only counts as a breakdown if the candle closes below it. Did not close below it. All right? I would have cut loss if SPY would have closed below 406. Okay? And since my entry was 406, breakout around 406.05 cents, then my stop loss would have been either a close under 406 or $1 from entry. So my stop loss would have been around 405-ish, right? Never hit my stop loss, and it worked out beautifully. Okay, and remember, I play this level to level. That means if I enter from the 406 level and my next resistance level is 407.5 to 408 zone, which was right here, that's where I look to take profits. I look to take most profits, 75% to 90% at least. That's my style. You can do what you feel is best, or you can copy me. It's not really copying me, because a lot of traders trade exactly like this as well. At least the best ones do, in my opinion. But yeah, level to level, no greed, take profit, and look at that, it pulled back. Gave us a false breakout setup here, but it wasn't a strong false breakout setup. All right, it just gave us a pullback, right? That's why a lot of time it's just safer to trade with the trend. Not every reversal, not every false breakout leads to a reversal, but every reversal started off with a false breakout. I'd rather play where the odds are in my favor. If I'm going to play a false breakout in the trend is strong, and I'm going to play a counter trend trade, I'm scalping it. All right, all week we were bullish. Since mid-March, we were bullish. Okay, so any counter trend play should be treated as a scalp play. Most people, they want to act like the next Michael Burry for some weird reason. Hollywood magic, probably, I don't know. But anyways, but one thing I want you guys to notice, and I hope whether you won or lost this week, we got to take the lessons in so we can improve on next week, right? So one thing that happened a lot this week was how we based or consolidated just under resistance. In this case, we consolidated just under the 407.5 to 408 zone, as you guys can see here, before breaking out. All right, it's happened similar with the 404 level. You see, we were basing. All right, basing doesn't, or consolidating doesn't just mean choppy action. It could also mean a pullback. All right, so we base and consolidate just under that 404 level. Look where we closed at the end of the day. Then we rallied. All right, we can go back some more. We based, this was a 400 level I had. I had a 400 level, right? Around 400. We based just under it for hours until we finally broke it out to the upside. All right? It's the same concept with support. If we're basing just above support, we keep testing the support, eventually we're going to break down that support. All right? It's the same concept. Just imagine somebody that keeps banging on the door. Someone really strong that keeps banging on the door. The more they're going to bang on the door, eventually that door is going to break down. So if the door defends or the resistance defends, you want to see it break down support. That's how I trust rejection from resistance. If it's strong enough of rejection, it'll reject from this resistance and break down the next support. That's how I trust it. Well, a lot of times, it doesn't happen all the time, but a lot of time, instead of when it does reject, they're just basing. When it does reject from resistance, they're just basing to build that strength so that they can finally break out. Okay, so that's a little something that I hope you guys can see that happened this past week, and I hope you guys can use that concept and information in the future for your own personal trades when you recognize these behaviors in real time. I think it's important and a good concept to learn, all right? Now, we broke the rising wedge, and the gap fill was around 408. We closed above it, came a few cents shy of the 78.6 fib level. Okay, so levels to watch come Monday is the 408 level. All right, actually, let me be a little more specific with this. The close for this candle was at 428.28. 408.28. So that means the actual gap fill was at 408.28. So that is support, guys. 408.2. And then there's support based on the rising wedge at 407. Okay, because it rises up. So when do we look to short? When we get a false breakout setup or when support fails, right? So 408.2 and 407 fail, then this big candle yesterday was likely, not 100%, but it's likely that it was a bull trap. Okay? Remember, the news was bearish, market rallied. Now what's the news saying? News is saying inflation is dropping, right? The bank situation is getting stabilized, right? That's when you want to be careful. When the news is bearish, that doesn't mean you should get bearish. I mean, you can, but you want to use the price action to guide you. But a lot of times these news are made to manipulate us. They're made to manipulate us. So when they're bearish, look what happened. Bank crisis, holy moly, and then they rallied. It's manipulated. And now they're trying to say the bank's getting stabilized, inflation is dropping. Be careful, all right, and don't catch FOMO. A lot of you guys didn't want to buy calls when we recaptured the 200 daily moving average. A lot of you guys didn't want to buy calls when my 395 level was recaptured. Don't buy calls now, all right? Wait for the right setup. RSI is very overbought now, but you still got to wait for the right setup. If we break out above 410 and then break back below it, false breakout, guys, sure. But if we break up down 408.2 and break down 47, look to short. That's what I would do, okay? Gotta get the right setup. Don't call a top. Don't call a top. Now, right now the trend is bullish, and SPY continues to break out of resistance. As long as SPY defends support and stop breaking out resistance, I'm still gonna follow the price action, no matter what the RSI says, no matter what the news says. Why wouldn't I? My goal is to make money. If the market is going up, why would I not try to follow that? I want to make money, level to level style. I'm not chasing home runs. I just want to make money. A $500,000, $2,000 day, I'm happy. Okay? Depends on your capital. All right? If you make if you got a small account, you make $100 a day. In my opinion, that's good. That's $500 end of the week. You know what I mean? That's it. So remember the levels, guys. If you want to get bearish, watch for the breakdown of the support level, 48.2 and 47. Break back within this rising wedge. Give us a false breakout setup. Give us a false breakout setup. Break back below 404. Break back below 402, this yellow trend line. All right, actually, this yellow trend line is now at 401.5. So break below 401.5. I have a fib level, 50% fib level at 399.5. But guess what? That fib level also is a confluence with the support of the rising wedge. So if it breaks down 389.5, that's extremely bearish, targeting 396. Okay, 396.5-ish, and then 395, the next 38.2 fib level, and so on. We short breakdowns of support. We long breakouts of resistance. I do this all the time, guys. My strategy works. Does it work 100%? No. You still have to manage your risk. We're taking on risk. We're not avoiding risk, but we're not going to let our risk mess up our portfolio. We got to manage it because this strategy is not 100%, but it is better than 51%. So if you are good at risk management and got a strategy that is at least 51% or better, you, I believe, can be profitable in the long run. Okay? Be a specialist. Be a specialist. Find the strategy that works for you and be a specialist. Become the master of it and be consistent with it. All right? So you guys got my levels. You guys got my setups. Trade it unbiasedly and stop letting your ego get the best of you. All right? We're just trying to make money. I don't feel it's beneficial to make fun of my viewers and stuff like that. I want you guys to succeed badly. I want to be a legend. Uncle Charters wants to be a legend. The only way I can be a legend is if I actually help people, if I actually make a difference. But at the end of the day, you can bring the horse to the water, but you can't make the horse drink the water. I'm trying to get you guys to the waters of the cleanest, most beautiful rivers, man. You feel me? But it's up to you guys want to drink it, all right? But just know that there is love from Uncle Charters. Now, speaking of bullishness, look at this. Triple Q, I got the 78.6 fib level at 317.2. Broke it out, guys. Look at that. Beautiful. Beautiful. Yesterday, I mentioned to stay bullish above 315.2. Watch that 317.2 level. We broke out. Testing a previous high right here. That's around 321-ish. Okay, 321.5. We do have a gap fill at 322.86. We can round it up to 323. Gap fill at 323 with 326.5 above. 330.5 and 334.4. Okay, if you guys wondering where am I getting these levels, I'm just looking at previous pivot lows and highs. Okay, All right, previous pivot lows high, like this 326.5 level. You can see it was tested as a resistance and a support on this candle, August 17th candle. Okay, that's how I look for. I have a channel. Of course, I have a channel. I have a video on my channel, the education section, where I talk about how I find levels, support, resistance levels, stuff like that. Okay. So, anyways, above 317.2, I am bullish on triple Q. It cleared a 78.6 fib level. Could it possibly chop this week? Yeah, it could possibly chop the cool down. Now, if it chops though, just because it's not continuing to go up, if it chops and stays above 317.2, that's bullish. Okay, build it. The price takes a stairway up, right? So they gotta form the stair. It's not necessarily bearish. All right. Now it's bearish if we break back below 317.2, break back below 315, 313.5, and 311. Those are support levels. Break down support levels. Then we can start getting bearish here. Okay? Don't hate me. Hate the price action. All right? I'm just the messenger. I'm just trying to translate it for you guys. All right? So above 317.2, stay bullish. Below 317.2, and especially 315, get bearish. Okay? Play it level to level. Play it level to level. If you believe in more of the move, leave runners. Don't take on risk that you can't handle if it was to go against you. Okay? Don't take on risks that you can't handle if it was to go against you, and then start sending Uncle Charles terrible messages. You know who you are. Anyways, let's go to IWM. So yeah, IWM, it rejected from this fib level 176.5. I mentioned look to long if it can clear or recapture, and boy, did that worked out beautifully. I had a 179 target though, got pretty close. It's at 178.64. Okay, so based on this purple trend line that I got, it's sloping up. 179.7 is the breakout level. If we clear that, that's bullish. Look to short 181 to 182 zone in play, with a critical level at 184 based on this green trend line here. If we break out 184, 185.2 and 187.5 is in play. Okay, you want to get bearish when we break support, so we need to break down 176.5 and trigger more downside. Short the breakdown of 176.5, targeted 174.3. If that is lost, it's definitely bearish. Got a gap at 171.8 and 170.3ish as another support level to watch. Okay, above 176.5, stay bullish. Below, bearish. Apple, I mentioned to you guys, if you listen to Uncle Charles, I try to keep it extremely simple as for you guys. You guys are not simple as you guys. You guys aren't simple. You guys are all complex creatures that are very unique and amazing. Okay, but I do want to try to make our trading, process simple. All right, we had that 160.5 resistance level on Wednesday. I mentioned that we cleared it. That is bullish. That is bullish. We based just below. Remember, we talking about basing under resistance, right? You see Apple basing just under that 160.5 resistance. We finally closed above it on the daily chart. Look at that, showed follow through. Now look at that orange line. Look at that orange line. This is from all-time high, connect to March 30th high, August high. Now we're looking for a potential fourth touch. Okay, the fourth touch would be 165.2. We've rejected from this line before, and now the RSI is very overbought. Can we reject here again? Okay, so yes, 165.2 is the resistance line. If it rejects there, it needs to break down support starting with 163.5, 162, and 160.5. Below 160.5, that's a 61.8 fib level. If it breaks back down that level, in my opinion, that is bearish. Okay, if it breaks out of 160.2 and breaks out this trend line, because let's face it, this past year we've been pretty conditioned to reject from there. Look at the past behavior. Can it happen again? Sure, but it need to break down support. But if it breaks out above 165.2, that's bullish. Put it 170-ish in play. Okay, and look at beautiful Tesla. I told you guys, watch for the breakout of the bull flag. Woo! All right, this is a beautiful trade idea. I had this trade idea in my Discord, right? Bullish trade idea, bearish trade idea. Got to give 2 case scenarios. But I wrote here, we got a double top around 197.3-ish, but I would look to long at 197.5 clears to put 199, 201.5, then gap fill at 203 in play. Holy moly. Tesla did even better than I thought. Man, it was a beautiful trade, I tell you. And look at that breakout of the bull flag, and it just showed follow through, man. It's beautiful. So right now, I got support at 203. The 201, and then that double top that triggered this nice move at 197.5-ish. Break down those levels, then maybe we can start getting bearish again, especially below 190.3. Break below 190.3, this breakout of the bull flag is a false breakout. That's when you want to short. Breakdowns of support. Stop calling tops. Your P&L is red as hell. You know it is. Anyways, so yes. So I got support, like I said, at 203. All right, there is support at 207 as well. All right, if Tesla can hold above 207, 211 is the next one, the next level I'm watching, with 214.3 and 217.6 as the next targets. Okay, beautiful, beautiful trade. I hope you guys made a lot of money. Okay, you guys got my levels. And why am I looking at Why am I looking at stocks? DXY. All right, DXY. Look, check it here with DXY, okay? We got this green trend line here. I started from February 2nd low and connected to March 23rd low. And look at this. We got two more tests, March 30th and March 31st this past week. Off this green trend line. It's bouncing and defending, guys. So there is resistance in the gap fill at 102.8-ish. If we can clear that, I like to see 103.4 and 104.1 tests. Above 104.1, I'd be bullish. Okay, but right now it's not looking that bearish. I mean, I know it's been acting weird lately, but bouncing off this trend line and recapturing my Fibonacci channel line is a good sign here. But it'll need to show follow through and clear 103.4 as I mentioned. Now the breakdown of this green trend line is 102.1. If we get a dead cat bounce and we break down that level, that's bearish, and we could see 100.8 back in play. All right. And why am I looking at Bitcoin? Need to look at the VIX. And here is the VIX, guys. VIX is looking bearish still. And look at here, for all you Bollinger Band lovers. VIX is, the Bollinger Band's at, the lower Bollinger Band's at 1691. So VIX is not overextended to the downside. It actually has more space to go to the downside. Will it go to the downside? We don't know. But there is support at 18. If it breaks down 18, then yes, I'll favor more downside down to 17 and possibly 15.6, okay? There is resistance right now at 20. If VIX can bounce off of 18 and recapture the 20 resistance level, that'll put 21.2, 20 DMA at 22, and 23.8-ish in play. Okay, recapture 20 and maybe VIX will look bullish, all right? Now let's take a look at the option flow. Filter for 500K premiums or above. Now, the sweep orders are the most aggressive split and block orders aren't. But why do I still keep it in there? Is because I like to see the difference between the aggressive plays and the non-aggressive plays. I like to compare them. It helps, gives me context, okay? Just because I do this doesn't mean me saying you have to do this, all right? You do what works for you. I'm doing what works for me, okay? So, yeah, overall, bearish 69%, not as bad as the previous days. So we are getting more calls coming in. Still seeing a lot of puts coming in for April 21st. Aggressive put sweep order, 5,000 in size, 388 strike price. I tell you, a lot of these people that's been buying puts lately have been getting cooked. But maybe, just maybe, that all those puts for April 21st are just hedges. I don't know. But we do got some calls, 424 strike price right here for April 21st. So that's a difference right there. You know, got a lot of calls coming in for May 19th as well. So they're just starting to show up. So that's something worth mentioning in my opinion. But overall, bearish on the flows, triple Q, 51%. Now that's a difference. That's different because it's been bearish lately. But today is, yesterday was bullish. Look at this, 316 strike price for March 31st. Wow, that was an aggressive play. Maybe they made money. But sheesh, a day trade, 0 DTE. Holy moly. 318 right here for puts for April 3rd, this coming week. So somebody's bearish on triple Q for this coming week. Right? Other than that, yeah, there's calls coming in, but maybe let's see if we'll get a rug pull. All right, we could, maybe get a rug pull, maybe not. 77% into puts. We're still seeing these big block orders, millions and millions of dollars. Like I tell you guys, when we see these type of flows coming in, there's usually a big move that's gonna happen very, very soon. Okay, but overall for IWM, they are puts. All right, this is a very, very in the money put. 205 strike price, 195 strike price. This is a call. 180 strike price for April 21st. Okay. All right, but overall bearish for IWM. Look at Apple, 100%. No one's buying puts. All in on calls. Careful with that one. Tesla, 52% in the calls. Man, these things been so bearish lately. And now that the market has risen how it's risen, the flows want to turn bullish. Holy moly. Guys, be careful. We got a lot of people catching FOMO here. Doesn't mean we're going to drop. I know that's what bears want to hear. All right, I'm telling you guys what you need to hear, not what you want to hear. Now let's end this with the VIX. 51% in the calls, 49% in the puts. Mixed reaction in my opinion. All right, thank you guys so much for watching. If you guys want more content from Uncle Charters, want more guidance during the day, make some money, definitely consider joining Uncle Charters' Discord, aka Uncle Ram, aka D Charters, aka The Sheep. Bye. Peace.